Hello everyone, welcome back to our channel. So everyone keeps on thinking about what exactly financial freedom is, or we would have come across this term a lot of times in our career and everyone want to achieve it. So we have a solution to those answers, and today we have expert with us, Mr. Jay Prakash, who carries around 20 plus years of experience in finance and banking sector. And he's going to share his experiences, how to achieve it, and we have certain other questions as well, and we're going to ask him. So let me introduce to you guys. Hi, Mr. Jayaprakash. So, I want our viewers to know who exactly you are and what experience you carry. Tell me a bit about yourself.
Yeah, sure. Thanks, Akshay. Thanks. Good morning, everyone. Thanks for having me. My name is Jay Prakash. I manage everything with respect to customer relations in terms of servicing on customers, managing growth efforts for AI Growth Limited. Prior to that, I worked over 18, 20 years of experience, primarily in the financial services space across geographies, primarily targeting and servicing direct consumers. And sometimes they are direct consumers, sometimes they are business customers as well. And my experience have been about serving and providing financial services products right from the complete life cycle, if you think about it from a customer standpoint. And that's how I've been working on.
Okay. Thanks a lot yourself. Now, I have prepared a list of questions. The questions are from different websites, from different FAQs, from YouTube channels. People keep on asking these questions and they don't exactly know answers to these questions. So I have prepared a set of questions for you. So let's start with the first question. The first question is, what motivated you to pursue a path towards financial independence?
So, like, Shay, if you think about it, right? See, right from my early part, I've always been very keen on managing, planning, budgeting, savings, investing. Because if I think about it, I've spent good amount of time across markets to understand there are a lot of factors that they are in the globe, right? Which you cannot control. When you talk about calamities, you talk about market crashes, financial crashes, stock crashes. So there are always a lot of things that is not in your control. But there are always things that you can control. You always want to be in a situation where you have an ability to manage these ups and downs if you can plan your things better. One of the things is also from me is what I have learned from my dad with respect to putting, saving, investing for somebody who I've seen in front of me. It's also some of the things is also about what I've seen when I'm growing up, when I've seen my dad working his way up with saving, investing, and thorough, thoughtful planning, whether it's education or any other things as well. That has also inspired me very early on in my life that there are things that you can control, there are things you cannot control. I think I felt the fact that by taking control of one's financial side of things, it puts you in a better position as you kind of ride the different storms that come in your way.
Now that you have talked about the motivation for financial freedom, now the real question that everyone wants to know: how do you define financial freedom?
Yeah, it's a good question, right? I mean, if you think about it, financial freedom as a topic has been talked about in multiple ways, right? I mean, there is no proper definitions. There are multiple definitions. Some think about financial freedom as something where you don't have any more dependence on your parents or your family, and you can take care of yourself better or yourself. That they define as financial freedom. Sometimes people think of financial freedom as something where you're having a good income every month and that income is enough to cover your day-to-day expenses and you're always good because your income is more than your expenses every month. So I attain financial freedom. And that is ability for you to have an amount of cushion, whether it is savings, investments, real estate, gold, or passive income as well. That cushion is enough for you to cover your monthly expenses on a go-forward basis without having a need for a job which you are depending on a month-to-month basis, even though that is not the job you want to do. So, which basically says the fact that whatever I have is enough, I don't need a job. That's a more general definition through which everybody looks at it. So, I would say that would be a proper definition of how financial freedom is for most of the folks.
Now that you have told that financial freedom, people don't do their jobs, regular jobs. Now every one of us don't want to do their job; they want to achieve financial freedom. So my next question to you is: how do you exactly achieve financial freedom?
Yeah, I think that's the $1 million question, right? So if you think about different folks, everybody have their own views about how do we go about it. I'll just share my few cents on this one, right? I strongly believe that financial freedom will not be achieved without any planning. Okay. There's always outlier scenarios that can happen where somebody could achieve it without any planning, right? But for most of us, proper planning is the only way to achieve the financial services, right? Financial freedom, if I think about it, right? If I think about broadly in terms of financial freedom, right? In my mind, I'm kind of thinking about like approximately like 8 factors, if I really think about it, right? And I'll just briefly define it in my mind, right? So one is the fact is knowing where you are, right? Knowing where you are would mean that you need to have a good understanding of what your monthly expenses are, which means you have to put a careful thought into where all you're spending. I mean, obviously, there's going to be ups and downs. You need to average it out and understand where your monthly expenses are. You need to have an understanding of what are you earning. That earning might be direct paychecks, can be something else, passive, whatever income that you have. Then the other part of what would be is really thinking about it is what do I have in assets? Do I have some cash balances, investment balance, and everything? So that aspect of knowing who you are is very important, which means you are tracking what you're doing. That's something everybody needs to have a good basic understanding, right? Then the second most important thing is simply what do you want, right? What do you want in my thing would be is you have a current lifestyle. You want to have an expected lifestyle, right? So in expected lifestyle, you can think about very lavish, right? You want to be practically in your expected lifestyle. With your expected lifestyle, then you start thinking about what is the expenses that is going to managing that expected lifestyle, which means
That can be
understanding.
different for everyone.
Absolutely. It'll be different for everybody. And see, expected, that's also could change as well. But you to have some practical view into what is your expected lifestyle. And here you have to take everything, your dependence, education, health, everything you have to take into account, right? Then you think about, okay, well, that is my monthly expenses for my expected lifestyle. Say after financial freedom, you want 20 years of life that you want to manage. Then you can understand what kind of corpus you need. If you, after achieving it, what do you have to do it? So with knowing that corpus is very critical because that's your goal of what that is. And you are sitting in some time. So you define what the timeline between now and that deadline that you have by which that corpus have to be achieved. Then you put some milestones around it and then try to achieve, which is very important because if you are not going to think about what you want to be or where you want to be, it's very difficult for you to plan anything. So that's the second part. Knowing where you are, knowing where you want to be is two important things. Then everything else comes in the factor of, okay, what are the tools that I should be put to get there? In my mind, 4 things I have there, right? So 2 we spoke. The 4 things are for me, debt management, savings, investing from a standpoint, and then budgeting, right? Debt management I put separately because a lot of times when you look at people, right, people have different type of debt, whether it's home loan debt, personal loans, car loans, credit card, and these carry different type of interest rates and there are costly debt as well, right? Knowing which all is costly, how much all those is very important because your primary goal is to kind of cut that, tie to it. Then savings, we know what savings is. You have to put some money. You have to have a savings plan tied to it. Then there's a portion of your income you put towards investing. Then, so savings, budgeting, which we talked about, right? Which is you have monthly expenses that you have planned. That's how you create the exposure. So that budgeting of trying to fit is very important. So those are the 4 parameters that you have to think about when you think about getting financial freedom. The last 2, which normally not a lot of people talk about, but I think it's very important, would be is financial education, right? Because things are changing all the time. Okay, a lot of times people get into and put into it, but things have changed. They are not equipped enough to understand the nuances of it. At that point, they might need to get financial help through financial advisor, or they need to be educated. So that's very important as well. So that is a very important factor. The other one is for me health, and they always say health is wealth. So at the end of the day, managing health is very, very critical because if you're not healthy, then your financial independence on what you're trying to achieve, all that doesn't matter, right? So these are the 8 things in my mind about how you go about doing the financial freedom or try to achieve the financial freedom.
And according to you, all these things are easier said than done.
Yeah, that's definitely true, right? I think that is the reason when we think about each of this, every aspect of it, right? It is the meticulous, it is the effort that you have to put in, right? So when you think about having a corpus, this is the goal that I want to have. Then you sit and try to do the budgeting, okay, because you created the corpus based on how is your expected lifestyle monthly spend is. So that budgeting, you have to put it and also follow it. Same thing with savings, right? If you want to have a 6 or 8 months savings corpus that you want to manage, because any drastic event you need to have that. So you need to look at your income. Say it's 100% of the income. Say if you're assuming 60% is going to go to my monthly expenses because of the budgeting you did, 20% go to savings, 20% go to investing, or is it 70-20-10? So whatever the ratio is, right? The ratios would be different. For example, if I'm at 20s and I'm having about a large credit card spend because I've done my master's education, having experienced myself, I've done master's, so I've taken a lot of credit card debt to pursue my education. So the initial period, your savings will be little that you want to put it, a little bit into investing, but you try to pay off your high cost debt, which is a very critical part. As you pay off your high cost debt, then you increase your savings rate, you increase your investing rate, which is very, very important. So the lifestyle allocation across all this, it requires planning. Not only planning, it is a question of your willpower to stick to it, right? And that's very important.
So you should plan and work for it. That is the main.
Absolutely. It doesn't happen easily.
So now that you have talked about planning and working for it, so investment is basically the root cause of planning. So what role does investing play to achieve financial freedom?
Investing to me is plays significant role in financial freedom, right? So let's say, for example, if I'm trying to put some money and keeping in the savings and FD, your annual rates after tax could be 5. Your inflation is 5 to 6. So if you're going to earn every month, I'm going to put it in savings and FDs. It's not going to cut it. So investing plays a significant part in wealth creation, and that journey leads to financial freedom as well. And when you think about investing, right, there is always going to be that short-term goals and long-term goals. For me, investing, you have a longer view in investing, and that's something very, very critical. And much earlier also, which is something we'll discuss. It's very important. And putting the money for amount in investing regularly for a longer period with a long-term goal. And here we talked about the corpus that we're talking, which is a long-term goal as well, is a very critical part of financial wealth creation. And obviously your fixed deposits, savings accounts, everything matters. And that's where the asset allocation will happen. But to me, there's absolutely no doubt about it that investing is the way to create financial freedom.
So in a gist, no one can achieve financial freedom just by saving the money.
Yeah, in my view, it is true, because as I told you already the numbers with respect to what a bank would pay with just keeping cash in savings account on FDs. And that won't be enough if you consider inflation, and that will not be enough if you want to have a good corpus for future.
So just now you said long-term success or short-term success for investing. So what strategies do you use? What comes into the picture when you want to achieve financial freedom by by investing? And for long-term investment, short-term people know about it, but about the long-term, they fail to understand what a long-term investing is. So according to you, what strategies people should use to achieve that long-term investing and long-term financial freedom?
Yeah, I think before I jump into a specific strategy or anything of that sort, or to share my thoughts on what I use, I'd rather try to at least start with the fact that the investment strategy vary from person to person. So actually your investment strategy is going to be different than mine, because we're in different parts of the life cycle, right? So that is very important, right? It is not going to be a jacket that everybody can wear, taken right. It has to be a little bit tailored to who you are, where you are, everything. But there are 3 factors that you can think about in terms of defining what that fit has to be for you, right? One is the aspect of the goals, right? Because your goals are different depending on where you are in the life cycle. So that goals, whether it's short term, long term, a lot of it I want to think investing in the long term standpoint, right? So that goals is the important part that which you need to know, or anybody need to know. Second part would be your returns, because you're thinking about a corpus and you're assuming something, right? So what kind of return will get to the corpus? That return expected that you have to have a little bit of fun. But the third most important is your appetite for risk, right? Risk is very different for each of us. If high risk would normally have high returns, but it can have a lot of volatility and you will lose as well. Low risk, as we talked about savings account, definitely it's a low risk, but the yields also are going to be smaller in that. That risk appetite will change again with respect to lifestyle or life cycle as well. So those 3 factors of goals, returns, risk appetite is very critical. So those things you need to have some view into where you are and what is your tolerance for all of those. Then you go into the investment strategy with those three things in mind, right? See, investment strategies, if I talk generally, there are things that is, I would say, something everybody should definitely adopt, especially when you think about youngsters and everything, right? Uh, Starting a SIP very earlier on for compound rate of interest where your returns are going to compound is one of the easiest and basic things that definitely, absolutely. But the question is, when do you start? See, my take on this would be the fact is we talked about the debt earlier on. So if you are a very youngsters, 20, graduating from college, if you have a lot of credit card debt or you have a lot of personal loan debt, which are like 23%, 25%, 26%, it makes a lot of sense for you to start paying all those things. While you might invest a little bit, but it's good to pay off a lot of this high cost debt. But but you start putting some money in investing, little at least, and then you can grow once you clear that high cost debt and everything. Starting early would mean a massive difference. The second part, a simple thing would be is you try to diversify with your assets, right? Diversifications we talk about, okay, there is equity and debt primarily, and there is always gold and real estate that you can kind of add to it. Equity and debt, that allocation also changes. When you're early in your career, you can take a lot of risk because you're looking at long-term 30, 40 years. Your equity allocation could be 80%. Your debt allocation could be 20%. Debt is nothing but your bonds that you can have, a little bit on the equities. Equity is equity. And there you can try to save money through index funds. But your allocation is different because you're thinking about a little bit long-term. That allocation, every year, you're kind of looking at it where you are. You're getting married, you're getting kids, and then you're going to journeys of 30s and everything. I'm talking in general sense. Okay. Then your allocation keeps changing. Your equity reduces, your debt increases tied to it. You go retirement, 65 you are, then your obviously your allocation should be around 80% the bond side and then 20% on the equity side. So these things change. Obviously here you're looking at risk as well, but I'm also talking from a life cycle standpoint as well, right? So these are few factors that you think, but you want to make sure that the diversification allocation across asset classes is something you think and you're putting and you're following it. Because a lot of times what happens is people tend to keep changing allocation because market is driving, your friend is driving, you're seeing somebody else. There is an aspect of putting and making the allocations regularly and committing towards it and sticking to it. There's always going to be some losses and there's some gains. Over a period of time, it kind of averages out and it kind of works in your favor of good returns side to it. But broadly speaking, I think investing, planning, having some thoughts around allocation, risk appetite, returns is very critical as you kind of think about an investment strategy every year.
Just now you said that people start investing in SIP early in the stages. So I want to know what exactly mindset play a role in achieving financial freedom. It's like a 23-year-old will have a different mindset to a 40-year guy. So what are the challenges people face when achieving financial freedom during in the mindset perspective?
See, definitely, as I told you, right, you cannot try to aim towards getting a corpus in future without a planning and sticking to it, right? Mindset plays a large role, right? If I think about it, right? If you, because you are thinking about something that you want to achieve at some point in time, and you are putting something on paper in terms of, okay, this is what I'm going to budget every month in terms of my expenses, this is what I'm going to save, this is what I'm going to invest. All this are fine on paper, right? I think when it comes to execution, those are critical because I think execution is the key tied to it, right? Because if you're going to put something and then assuming you'll have your lifestyle that is different from what your expected lifestyle that you're thinking about, then you're swinging a bat, hoping it will work and you want to hit a six, right? It doesn't happen that way. Normally, people challenges is typically, if I think about, some folks might have a challenge with respect to adhering to how much they're thinking about spending, how much they're thinking about budgeting or investing. Then there is an aspect of procrastination that happens is, okay, this 2 years, fine, I'm going to third year from another 2-3 years and then I'll start. And then you're then staring back and 10 years have passed and you've not done anything tied to it. So procrastination plays a large role. Then sometimes you are motivated by what is happening around you in terms of whether your friends, family, colleague, whatever, how they are doing it, suddenly feeling that looks much better and you're jumping ship. So it is aspect of looking at your mind and saying how your mind can be wavering all the time, right? That's very, very important to think about it and whether you can control, right? See, my take on that is you will make mistakes in your journey. The question is whether you will be able to come back and do it, because we are, as humans, we make mistakes. But when you look at it and want to come back, then what actions are you taking to make up for the mistake that you have done? And then try to create habits, right? A lot of times, I think I can probably call on one of the book I read recently. One is the Atomic Habits by James Clear, right? It talks about how habits are something that is have to be calculated or inculcated or developed by putting actions regularly, because sometimes some habits you want to do and it happens. Some habits is very difficult for you that you have to keep doing something to make it habit. And sometimes I do feel spending is a very important thing, because I do know a lot of folks sometimes controlling the spending is a difficult aspect of it. So there you can try to inculcate and try to look at practices that you can develop to create few things that can make it a habit for you, right? So that can happen, which you can cultivate, and that can help you with respect to do it. And other thing would be is have motivation or form with your partner or whatever it is. I think you can think about this is what you are, or try to create milestones tied to it to see whether you're doing it. So frequent milestones could help you look back and say, are you even following it or not? I mean, as I said to you, the fact is without putting effort towards all of these factors, it's always going to be a challenge. And sometimes you waver. The question is whether you can come back and then again start thinking. I think that's what I'll probably say to everybody is things can happen. It's just the question is how we're going to come back.
So in terms of habits, you said, so people usually go from office and sleep. People just play sports, go and sleep. They just eat dinner and sleep. So it's like it has become habit, their daily routine that they work in office, they go home, they eat dinner, and then they sleep. So here the mindset plays a role, and what different habits they can do or what changes they can do little by little to get into the investment side, so that they can have a passive income to achieve financial success.
Yeah, see, if you think about it, you rightly pointed out, right? You get into a routine and you want to have that routine and you want to, right? So, as I said, I mean, while I can indicate the fact, suddenly you want to change it, you won't change it. I think you have to put something on the paper to say the fact that if I'm in a week, how much time I'm putting into educate myself, right? The education could be anything. You want to get educated about a new type of financial instrument. You can educate about basic financial knowledge. You can want to educated about the interest rates people charge on different loans and how it is costing you. Or you can just take a look at what is the expenses. So you have to have something to think about of, okay, let me calculate what is happening with respect to have people looked into the credit card bill regularly, how much they're charging. So sometimes it is very, very critical for folks to go and understand how the day-to-day finances are happening. I mean, what is being charged, where are you spending, what are the different things. It's very important. I know suddenly somebody might not do it, but you have to have it in your mind that I'm going to do it. And that is something that you have to put in your head. Okay, I'm going to do that, tied to it, right? Similarly, if you're talking about incomes, you look at your income, look at what it is and what kind of passive income you want to keep. And for creating that passive income, what are you going to do? Is it going to be on the real estate, or is it going to be on some dividend stocks, or is it going to be bonds which are going to keep paying you regularly? So all those factors you put, okay, how much? So there should be some thought process towards what is that extra income or what is your expenses that are there. And you always want to have a thinking that you always want to stay below the belt with respect to the expenses. You put expenses, you want to do below the means. And you always have that. Also start thinking about, because everybody wants to have good dinner, a good hotel or good vacation or good car as well sometimes, right? So the question is, you cannot have the luxury of all of it at same point in time. So you have to at least have some mindset. If you are a person really looking into having good travel, then that is where you're going to spend most of it. Other places you're going to be as stingy as possible. If there is the food is what is going to be very good for you, you spend more. So you have to take factors in everything and then try to see if I add up everything, does it come below the means of what my budget is, right? But at the end of the day, it comes back to the same thing we talked about, right? Careful planning, putting time to understand is something, a habit you have to cultivate, and start with small and then you can start increasing from there.
So once you start with small investments in time, allocating time for self-educating. So people start learning that, okay, fine, I'm learning this much, and they actually gain from it. When they gain from it, they start, their lifestyle is getting higher and higher, and then they feel good about it. So their habits become like that.
Like that, yeah, absolutely.
So assuming that people have used their habits, they have planned accordingly, they achieved financial success. So what people say is it's easy to reach the summit, it's difficult to stay there. So people usually get financial success, but then they are not able to control it, and then they again have to work after that. So what are the challenges or some key factors or strategies, whatever it is, what exactly people should do to stay out of the summit?
See, I mean, I'll put it this way, Lakshay, right? See, when you think about financial freedom, you're thinking about a corpus that you want to hit at a particular time period, so that from then on, you can easily manage your monthly expenses without needing a definite paycheck, for example, right? But that corpus is built on assumptions. You're expecting a monthly expense, you're expecting these are my commitments, and you're putting it together. So I don't see the summit as something where I'm going and then touching there, and after that, there is nothing different. Nor I'm running a race where I'm catching or touching a flag, everything is different. It ideally, what it means is you've got into something, or you got somewhere with the assumptions you're building in terms of your lifetime commitments, your family, in terms of your lifestyle that's going to happen tomorrow. So it is based on all those assumptions, right?
Thanks for all the information, Jayaprakash. Now, before the conclusion, I just want to ask you anything you want to say out there to the viewers who are watching this and who wants to invest.
See, I think we covered a lot of topics on different areas. If I have to leave you with 3 or 4 things, we kind of discussed about it, right? Be very cautious on and putting the effort to do the budgeting. Make sure that you're saving regularly on a monthly basis, and definitely make sure that you're putting some money towards investment for future. If you can do all this with commitment, with a plan, you're on your way to achieving financial.
Thanks a lot, Jayaprakash. That was a great conversation to have.
Thanks for having me, Lakshmi. It's good to be here, sharing my views.
That's it from our side, guys. I hope you enjoyed this podcast and you must have gotten some information about financial freedom as well. If there is any other topic as well that you want us to cover for you, tell us in the comment section below, hit that like button and subscribe to our channel. Until then, stay tuned for more.